Okay, welcome to Chapter 4, Video 3. We're going to talk about encumbering a PO and the journal entries that are necessary for encumbering items on a purchase order, and also a journal entry that we will do when we're receiving the items, and the journal entry when we're realizing the expenditure. So we're really going to focus on 3 journal entries, and we're also going to focus on the equation that we looked at in Chapter 3 of appropriations, encumbrance for the purchase order. Remember, when you hear encumbrance, you need to think of purchase orders, the expenditures, and then what the available balance will be. When we're setting up a purchase order, we are going to do an entry or write out an entry, or our computer general ledger will do an entry for us, debiting the encumbrance amount and crediting the reserve for encumbrance. And here is what the entry looks like, and I'm going to place it on our chart paper here, just to have that in front of us. We're going to debit the encumbrance account and credit the reserve for encumbrance. We're setting up a PO for $30,000. Now, we're going to use the example that we have in the textbook in Chapter 4, showing the original appropriation of $423,000. That's the budgeted expenditure. Remember, appropriation, budget, expenditure. Now we've encumbered the funds of $30,000 when we issued the purchase order, issued the PO. We have no expenditures yet, and now we have an available balance, and it's just simple math. The appropriation of $423,000 less $30,000, no expenditures yet. We haven't received the items, we haven't received an invoice, so we're not going to realize the expenditure, and then we're going to have an available balance of $393,000. This is the example right out of the book. This is the example that I detail in the notes. Okay? Now, the next step will be we will receive the merchandise. We will receive the merchandise. And you have 2 sets of entries that look like this. The first one, whenever the merchandise is received, we are just simply going to reverse our earlier entry. We're going to debit the reserve for encumbrances account of $30,000, and we're going to credit the encumbrances account of $30,000. Okay? So I'm just going to reverse the entry. There's a little twist, or an extra twist, to this example. The items that we received, instead of costing $30,000, are only going to cost $29,000, and or $29,900. I correct that, $29,900. So what we're going to do, there's $100 difference according to that. So all we're going to do, we're just going to reverse our encumbrance amount. And so when we do the journal entry reversing that, we're going to take out the $30,000, and I'm just going to place this entry on our chart paper where we reverse it, and still we don't have an expenditure yet, and so our expenditure amount, as I said, is going to be $29,900. $29,900. We're just reversing our encumbrance when we receive the merchandise. And notice, we're reversing it for the amount of our original PO. We're not reversing it for the amount of the invoice or the amount of the merchandise we receive of $29,900. The money is unencumbered at this point, and it's going to be expended. Again, we're going to use simple math of the appropriation, the original budget expenditure amount, appropriation of $423,000, less now encumbrances of $0, because the purchase order is no longer in effect. Then we're going to have an expenditure amount of $29,900, and our available balance will go up $100. So it's going to be $393,100. What I've shown you is a simple example right from the book about encumbering money and then receiving the merchandise. And when we receive the merchandise, we simply reverse our original journal entry, reverse it, and then we realize the expenditure, haven't paid it yet, so we're going to credit our vouchers payable account. Once the expenditure is recognized, our available balance comes up $100 simply because the expenditure amount was $900 or $100 less than our encumbrance amount. If you have questions about this transaction, please don't hesitate to call, email, or stop by my office.